Hi guys, Ethan here. Today we're going to learn about how to take out the profits of your property without actually selling it. Disclaimer, this is not for HDB. But if you are a HDB owner, just watch lah. Let's say you bought a property at $1 million. At this point of time, the property is now worth $1.3 million. Okay, so to take out this profit, right, there are two ways. One is to refinance. The next one will be to sell off the property. Okay, so you sell off this property, you need to pay the agent 2%. This is the standard agent fee, right? Then you don't have a house. Then you need to buy a new house. Then the new house is going to cost X amount of dollars, and then you have to pay 3% minus $5,400. This is stamp duty. This one is what we need to pay to the government. We haven't even covered, right, the renovation costs, the moving costs, the fact that you have to uproot your whole family. If your upgrade is not super significant, right, relax, hold off a while. There will still be new properties, there will still be new opportunities 5 years from now. Alright? Meanwhile, right, you're able to gear up. You're able to take out this cash and make it work a bit harder for you. Gearing up, also known as equity term loan, also known as remortgaging your house. This means, right, you will use your house as collateral to take up another loan. Okay, before you guys get too worried about taking up too many loans, this is on the profit. This is an actual profit that you have. If you do not have this increase in price, you will not be able to take this. And to calculate, right, whether you can take this or not, here is the formula. Gearing up is also known as equity term loan or remortgaging your house. Okay, what it essentially means is that your house is the collateral. And because of that, right, they will be lending you this money, right, based on your housing loan interest rates. This is usually a very low interest rate, below 2%, which is Singapore's target inflation rate. We take 75% of the valuation, minus away your outstanding loan, minus away your CPF. This includes the accrued interest. Okay, so how to get this? So to get your valuation, right, you gotta go to SRX's website, then go under X value. After you go there, you key in your property details, and of course they'll ask you to sign up using Facebook or something like this, and then you should get a rough valuation for your property. You can use that as valuation. You take that times 0.75, okay? Then minus away your current outstanding loan. To find out the outstanding loan, you'll be able to go and check your bank's website, or they will send you like some letters or some way, or just call the bank lah. Okay. Then the last one, right, will be your CPF. Okay. What you wanna do? You wanna go over to your CPF portal, go under My Statements, then scroll down a little bit until you see section C, which is your property. Go into your property, then you'll be able to find how much you actually put in using your CPF, and then you will be able to see like how much the accrued interest is. Accrued interest is running at 2.5% per annum. So after you run all these numbers and realize the number is still more than $100,000, this is when you most probably will be able to gear up with any banks out there. The reason why I say most probably, right, is because this is a rough valuation. To be able to find out the actual valuation, you have to approach the banks, every single one of them, to try to match this value, or you can come to me lah. Unbeatable.sg. What if the value is less than 100k? What if it's 30k? What if it's 50k? There are some banks that are still willing to help you gear up, and that's why this link is still here. Come talk to me. So after you've geared up and you're not sure what to do, right, I got a very simple strategy for you. Take whatever amount that the bank gives you and then pay back to CPF. Okay, so let's say, right, CPF is charging you accrued interest at 2.5%. The bank is charging you 1.7%, let's say, right? The difference between these two, right, is 0.8%. 0.8 times $100,000, this will save you $800 every single year. And this every single year until you sell. If it's 200,000, if it's 300,000, it's quite substantial. Okay, so there's a part 2 to this strategy. You realize, right, your outstanding loan will increase, let's say by $200,000. Then your CPF will decrease by $200,000. So net zero. This means, right, 2 years later or 3 years later, when you refinance and gear up again, you can gear up the very same amount. is to make a housing refund based on the amount that you use, maybe for the 20%, maybe for the down payments. But what it means, right, is that your money will go directly into your ordinary account. So, with money inside your ordinary account, you can then use your ordinary account to pay for the monthly installments. It's a left pocket, right pocket kind of situation, but the longer your money is inside your ordinary account, the better your interest rates are. What I want to add, right, is that the amount that you give out, right, it is a different loan. And this loan can only be serviced by cash. So your CPF will service the main loan, and then you will use a little bit of cash to service this one. But guys, this is only one strategy. I will always advise my clients, right, when you want to gear up, make sure that it becomes a good loan. The difference between a good loan and a bad loan is such. A good loan is when you borrow money, and this money works harder than the interest rate for you. If you're borrowing at 1.7% and you make 2.5%, that's not bad. If you're borrowing at 1.7% and then you make 6%, that's additional income. Right? However, if you want to take out this money and buy Lamborghini or something that you don't really need, right? Then I suggest, one, you throw everything into CPF, don't see the money better. Number two, don't take. It is that simple, don't take. That's it, we've come to the end of this video. If you've learned something, like, share, and subscribe. Okay? If you've got any further questions, right, or like want me to talk about anything, right, keep it in the comments down below, I'll be active there. If you need anything for housing loan, you know lah, right here. Right here. Anyways, it has been fun. I'll look forward to seeing you in the next one.